Welcome back to the ETF Inspector. It's Saturday, August 2nd, about 12:45 in the afternoon, and this will be our weekly update on the 7 YieldMax individual income funds that we cover. I've highlighted GOOY here for Alphabet's company Google, just because they're one of the ones that we cover that's going to be paying a dividend this upcoming week. But the other 6 are AMDY, AMZY, APLY, FBY, MSFO, and NFLY. As usual, I am also on X to let you know when videos are coming out in case you want to be in the premiere for the live chat, and I let you know about trades and distribution announcements. I repost those as well from the different companies that I cover. So, and we will talk a little bit about distribution announcements this week for the ones that we covered from last week. I also update the 30-day IV each week before I make these videos and make the estimates. I like Market Chameleon. I'm not sure if you guys have other websites. I'm really looking for one to show me a 7-day IV. So if you have a good one, put it in the comments for me, please. Okay, everybody knows the market was pretty ugly on Friday, but we will go ahead and get into, here's all the funds and the underlying that they are based off of that we cover here. NFLY was the only one that actually had a green day. The rest were red. But we'll be looking at the whole week. So we go to, sorry, I meant to show it. We go to YieldMax's website. You can scroll up, go to our ETFs, covered call ETFs, and all the individuals. Lots of big ones, NVIDIA and Misty that retire on dividends covers, Tesla. I cover some of the not so big ones. But once you go to the site, you can scroll down. You can see past distributions and go a little further. You get a little bit of fund data. You get your intraday trades, so I download them each day of the week to update the spreadsheet, and then I just do a once a week video at the end to give you an idea of how things are looking. You can download the holdings. I just did that before I made this video. I only update the holdings once a week right before I make the video. All right, so we will start with our Group D funds that just paid this past week. So if you have, we'll start with Amzy, but for Amazon, Amzy and Appley for Apple both paid this past Friday. So they were Group D. If you watched the video last week, I did decent, I think, as far as my guesstimate for Amzy. They made $2.41 per share, but based on the IV of the fund, it was around 42 cents. So I came up with a guesstimate of 63 cents, and they paid 64.15 cents. So I was only off by 1.79%. So patting myself on the back for that one. So if you have shares of AMZY and you had them before the start of Thursday, and then you got 64.15 cents per share deposited in your account on Friday. So that came out to be, so at the time it was not a 56% annualized yield when they announced it, but because Amzy dropped on Friday, then it looks like a much higher percentage than it would have been. So 30-day IV of the underlying actually went down, even though the market had the big dip. So you would have expected it to go up. Just declared on this past Wednesday, so you still now got basically 4 weeks till the next one, August 27th. Amzy closed at 14.88. There was an increase this past week, which makes sense. People buying in to get the dividend. So 900,000 shares added to the outstanding shares, bringing it up over 19 million. The NAV and the closing price finished within a penny of each other. $287 million in there. So this one seems to be one of the more popular of the safe plays. Amazon doesn't seem like a company that's going anywhere. Their synthetic is at 220, expiring on September 19th, with Amazon at 214. That's a little underwater right now. It would cost $5 million to close it out, but we're not worried about that right now. That's basically just a placekeeper that allows them to sell calls. They cannot actually purchase all the shares that they want to in order to sell calls because of concentration rules. So this is a way that they can have an ETF that's based off of an individual fund. That's how they do these. So they have synthetics, and then they sell their calls. So we'll take a look. Most of the money, as in all of these, is always sitting in treasuries. Very small amount is actually what's getting put at risk, we'll call it. So for this week, here, we'll switch to the trades and then we'll come back and look at them. So they just paid this past week, and so that means their last trade that went towards it was from the week before. So then Monday of this past week was the start of a new 4-week cycle. They didn't make any trades until Thursday, where they just purchased some of their or they purchased some long calls basically as insurance policies for the sold or short calls. So that cost them $231,000 on Thursday, and then on Friday their roll to next week. So that's where they close out. They basically always sell a 1 week out calls, and then somewhere towards the end of the week, when there's not enough time value left to make it worth it, they close them out and roll them to the following week. So that's what this was, closing out. These are all expiring August 1st, closing out all those calls, paying a penny, paying a penny, paying a penny, and then selling the new ones for the following week, collecting $1.43, $1.87. What else? $1.72. And then this is adding on to the synthetic, or this is adding on to the synthetic. So they sold some more, 360 more puts, bought 360 more calls, and then started the option play for them as well. Altogether, collecting $1.9 million for the roll on Friday. Those positions now, we've got sold calls at 220, 220, 250, and 225. As you can see, about 220 and 220, 250 is the first half, and then the other half roughly at 225. They are 2.4, 3.6, and 4.7% out of the money. And then, like I said, they purchase calls for a credit call spread, and that limits how much they could have to spend to close out their positions in the event the stock ran past their sold strike. All right, so that's what we've got for Amzy. Next, we'll look at Appley. Again, another one that just paid this past week. We said they earned 8 cents per share, and based on the IV, which is when they don't make enough to pay out the dividend, they kind of, I don't want to say promise it, but they aim to pay out an annualized yield that meets the IV of the fund. So they were only supposed to pay a little around 30 cents, and so my guess was about 27 and a half cents. I was way off. We got a great surprise to the upside. So although they didn't make enough to pay it, they chose to pay out a 41-cent distribution this past Friday. So I missed my guesstimate by almost 33%. But like I always say, I'm here to provide all the information. I meant to show you too. So when you go on their page and you download, right, this is what the download looks like. So a whole lot of not needed information, and then just not great to look at. Things are split up. So here's the first part of the synthetic, the sold puts, but then the purchased calls for the other side of the synthetic are all the way at the bottom. So I copy them out, group them together so you can see your synthetic all at once. 200, August 15th, right? 6,750 of them. It's currently worth $1.6 million because Apple is a little above the 200, and then there's time value as well. But again, you guys probably aren't interested in the QSIPs or the stock ticker information for treasuries. I put in the market value, but mine's actually the calculation of the shares and the price, not copy and pasted, just in case there were any errors. I don't put the weightings in there. I'm not sure if you care. Net assets, we have it, but we only put it on there once. We're not trying to show the net assets on every single line. All right, creation units, outstanding shares. We only need one time of outstanding shares. We don't need creation units. So that's what we start with, and then here's what I turn it into. All right, so as far as Apple, so we got an upside surprise on the distribution. Again, most of the money's in treasuries. There was an increase, more money coming in. Again, makes sense this past week. So this is from last Saturday's video to this Saturday's. It was an increase of 550,000 shares, which makes sense on distribution week. People buy in so they can get that distribution. The NAV and the closing price within a couple cents of each other. So we'll take a look at how they made out trading in this new cycle. New money came in, so they started new position, or they added to their synthetic position, selling puts, buying calls, and then immediately selling calls and buying further out calls to go along with them. Right off the bat, just starting them out for next week since it was a Friday. And then on Friday, they went ahead and went through with the rest of their closeouts of expiring options for Saturday or for Friday, paying a penny, paying 2 cents, and then selling new calls for the following week. Same thing with closing out their long calls and adjusting them to the next week. But really, those are just for protection. We're interested in the income, so that's why I kind of just highlight the short calls. Selling for $1.60, $1.64, and $1.59. All in all, collecting $768,000 on the trading day. So those options now are updated over here. These are our holdings. We've sold 207.50s that are 2.5% out of the money. This line actually should not be highlighted. And then we've got 215s sold that are 6.24% out of the money. So we do not, let's see. Oh, we do. So our protection for these 207.50s is split up. We've got about half at 212.50 and the other half at 217.50. And then the protection for these 215s are at 222.50 or $7.50 spread. There's about $136 million being managed in the fund and a little over 11 million outstanding shares. Okay, so those are what just paid this past week. Now let's get into what you guys are probably most interested. Who's paying this week? The only one we cover is GOOY for Google. Start off looking at their trades. They had trades on Wednesday and Thursday. On Wednesday, they were adding to their synthetic, right? 120 new sold puts and 120 new purchased calls at the 180, and then selling calls off of them to generate income. That cost $196,000, but realistically, that's not a loss, right? Money came in, so they put it to work, and it just so happens that the stock is up from that 180, right? 189. So buying the calls cost a lot more money at 180 than selling the puts at 180, because these calls are $9 in the money, whereas these puts are $9 out of the money. But that's just money getting put to work that just came in. And then on Thursday, it was the closeout and roll to the following week, paying 8 cents, 12 cents, and 11 cents to close out options and collecting $1.37, $2.13, and $1.34. That resulted in an $879,000 credit. And then we take a look, since this is the end of their 4-week cycle, at all trading days, and it actually resulted in a loss of $444,000 for the 4-week cycle. We take that information, bring it in to try to make a guesstimate. The 30-day IV of the underlying did increase this week, 29.1%. Our income doesn't really help us make an estimate because that would actually be a negative, so they're not going to distribute negative money. Based off of the IV, the 29.1% times 12.73%, it would be about a 28.5 cent distribution. The way I came up with my 34-cent guess is based on the gains or increase of the underlying and the fund over the past month. So if we take a look, and we are talking about GOOY, let's look at a month. So here's what our month has looked like with the fund. So up 4% over the past month. If we take a look, here was our last distribution. Right there's declaration day, 12/24, and there is nope, I got it. Does that make sense? Was the 11th a Friday? Yes. So yep. So Wednesday close, Thursday open. That's because of paying a distribution, and then it's just been on a nice climb. So where they're not going to end up making option income when the stock is on a climb like that, because every time you sell a call, you're going to end up paying more to close it out. But the value increased over all that time, so that's how they're going to pay it. I went back and did some looking at different distributions within the website based on time frames and based on the fund being at that price range, and came up with my guesstimate. So it's obviously, that's why I say guesstimate. So 34 cents is my guess. It could be lower for sure, but I basically came up with a 35% annualized yield was what I guessed. So we will find out on Wednesday, 4 days from now, August 6th, what that actual payout turns out to be. Like we said, their synthetic is at 180. It's currently worth $7.5 million if they were to close it out, but they're not going to. It's good till September 19th, and it's basically just a placekeeper so they can sell calls. So they're just going to keep on using that as needed. There's $140 million in GOOY. There was an increase in shares this past week of 200,000, bringing our outstanding shares just under 11 million. The NAV and the closing price are actually, I mean, it's only 4 cents, but if you were buying at the end of the day on Friday, you were actually buying this valued fund at 4 cents less than what it's worth. So you got a discount. Our options for this coming week, we have sold calls. So this one's a little different. We've got sold calls at 195, 197.50, and 202.50. They are 3.1, 4.4, and 7% out of the money. We do not have, call it insurance, purchased calls to cover all of them. We just have 200s for these 195s, so that's a $5 spread. Most we could lose if the stock flew past that 195. Most we could lose is $5 a share on that one, but the 197.50s and the 202.50s are kind of uncapped on the side of how much we would have to pay to close them out. But these funds are actively managed, so it's not like it's just going to run. They will close them out. And we may see them purchase long calls sometime this coming week to cover them. Maybe they're just waiting for a discount. Okay. Next, we will just kind of bounce back alphabetical order from here to finish off the rest of the funds that we haven't talked about yet. So AMDY, they are part of Group C. They just paid us 2 weeks ago. They had 2 trading days in this past week, and they were Wednesday and Friday. On Wednesday, it was a loss of $4 million, closing out and still rolling within the same week. So when you buy to close your 172.50 and you sell a 185 for the exact same date, you're going to take a loss, right? So they closing and rolling up because the stock ran up past their sold calls. That's the reason for that deficit on the trading day. And then the next trading day was Friday, where they closed out a portion of their synthetic, 400 contracts worth, right? Buying to close those puts and selling the calls that were already purchased, and then closing out the options associated with those and then the rest of Friday was just closing out expiring options for the 1st and selling for the 8th, paying 2 cents, 1 cent. Oh no, 2 cents and 1 cent there, collecting $3.25 and $3.43 on the sale to the next week. So they did well with that downturn on Friday. Previous declaration date was the 23rd. Like we said, they paid 56.56 cents. It was an 84. Well, at the time it wasn't an 84%, but that would be because of AMDY's drop on Friday. But the next declaration is August 20th. The IV of the fund has increased over the past week, up over 55%. There was a decrease in shares, 300,000 worth got people sold out of the fund, brought us back under 22 million outstanding shares. The NAV and the closing price on Friday are dead on with each other. There's $190 million assets under management within the fund. The synthetic for AMDY is a 155 for September 19th. That's currently worth almost $20 million because AMD is at 171. That if that were to be distributed among the funds, that's worth about 90 cents a share. Calls sold for this week are 180 and 185. They are 4.8 and 7.7% out of the money. So we will see how we'll see. So you see them with a 30-day IV of 55. They're selling a good bit further out of the money, 5 and 7% out of the money, than the ones with the low IVs where they're selling 1 and 2 and 3% out of the money. All right, we covered Amzy and Appley. We'll go to FBY next. We'll start with the trades. They had trades on Thursday and Friday. On Thursday, they started off with closing a portion of the synthetic, 130 contracts worth, and the associated options to go with them. And then they also were closing out some calls expiring on the 1st and selling out to the 8th. So they were already rolling to the following week. And that's because Meta blew through their strike prices. As you can see, they were paying over $30 a share in some instances, $35.27 to close those out. And then selling, only collecting $560, $760, $730. So cost them $5.2 million on that closeout. Let's see. Let's take a quick look. Worst one, $745 is what they were paying to close out, paying a ton of money for. And then where did Meta end? $750. So they would have made out much better if they waited until Friday, but nobody's got a crystal ball, right? They didn't know it was going to drop. Then on Friday, they added to their synthetic here, 60 contracts worth, and sold new options to go along with them. So that was a $148,000 loss on that point, and that is just because the price of Meta is above their synthetic. So to buy the calls costs a good bit more than it does to sell the puts. They are part of Group B. They last declared on 7/16 and paid on 7/18, almost 50 cents a share. Next one is August 13th. That's 11 days away. Meta's 30-day IV has decreased over the past week to 28.3%. There was a decrease. People pulling money out of the fund by 100,000 shares, bringing us down to 11.1 million outstanding shares. There's about a 3-cent difference between the NAV and the closing price, so you're not paying much of a premium. 186 million assets under management. Like we said, the synthetic is at a Meta 725 for September 19th. It's currently worth $7.1 million or 65 cents a share if that were cashed out. And calls for this coming week are sold at 765. It's a pretty small amount, 60 contracts, 2%, and then 795 and 797.50. 6% and 6.3% out of the money. So we will see how they make out with those. We talked about GOOY already, so we're down to our last two. MSFO for Microsoft. They had trades on Wednesday, Thursday, and Friday. All right, on Wednesday, they closed out a portion of their calls that were sold and actually rolled them still to the same week, just up by $2.50. So that cost them $78,000. On Thursday, they closed out the rest. So they were giving it was going through their strike. They were only closing half just in case it came back down. Instead, it went up even more. So to close out the rest of them, instead of paying $441 like they did on Wednesday, they paid $12.13. So that one hurt a good bit more. So closing out, and at this point rolling to the following week, that cost 1.9, almost $2 million on that. And then Friday, they just bought to close some of their 532.50s and adjusted them to from this past week. They're just closing out that last remaining portion of calls. There was just 70 calls left, so it was a $12,000 profit. Again, Microsoft is part of Group C. Previous declaration was on July 23rd, where they paid 41.39 cents. Next one is 18 days away on August 20th. Microsoft's IV has decreased this past week to 19.5%. I believe Microsoft had like a home run day this past week, didn't they? Yeah, I'd say so. I'm thinking that was off of earnings. I can't remember. They have a September 19th 500 as their synthetic. It's currently worth over $7 million or 92 cents a share, with Microsoft currently at $5.24. Closing price of MSFO 18.11, where the NAV has it valued at 18.13, so you got a 2-cent discount if you were buying at the end of the day. There's 7.6 million outstanding shares, and our calls for this coming week are at 5.35 and 5.45. Obviously, huge difference in the amount of contracts. We can afford to lose the 5.35s and still win for the week if we don't lose the 5.45s. But they are 2% and call it 4% out of the money. And last but not least, NFLY for Netflix. They've had trades on Thursday and Friday. Let's see what they were doing. Closing out the 1200s and the 1202.50s and the 1205s that were expiring Friday and selling out to the following week. That resulted in a $459,000 profit, so good day trading. And then on Friday, closing out the remaining August 1st expiration calls, paying 55 cents, selling them for $7.96. And there was also a portion, if you saw, they closed out these 600 contracts and then never resold them on Thursday, so they still had them to sell on Friday. That resulted in $434,000 profit. NFLY is also part of Group C, so declaration was on the 23rd of July, where it was 43.5 cents. Next one is August 20th, 18 days away. Netflix's 30-day IV has increased this past week to 26.5%. Let's see, again, if you were buying at the end of the day on Friday, you got about a 3-cent discount off of the NAV. Money actually came out of the fund this past week. It went down by 150,000 shares to 10,125,000. Assets under management, 169 million. Their synthetic is at Netflix 1,280. So this got set back before Netflix had that bad week. I think it was the previous week. So 1,280. It's currently at 1,158. So that will cost $16.7 million to close it out. If the stock does not go back up. Our options sold for this upcoming week are at 11.80, 11.92.50, and 11.95. They are 1.8, 2.9, and pi 3.14% out of the money. Okay, that's everything I've got for you in the video. So quick recap as far as this coming week. The important part, Group A. So obviously there's more funds in Group A, but for us, We're thinking 28.5 cents is, I'll call that the low, but my guess is around 34 cents. They could surprise us high. They could not. So we will see. But other than that, I got a dad joke of the day for you, and then I'll let you get back to your weekend. So thank you for watching. Appreciate it. All the likes, comments, shares, everything. Appreciate it a lot. So dad joke of the day. How does a flower whistle? It uses its two lips. Don't forget, dad jokes are supposed to be cheesy. Okay, have a great weekend. Thanks for watching.